Let's start, though, with Malaysia, because after that aggressive easing cycle, they did take a pause. But Bank Negara was quite a little bit more upbeat at the September meeting as well. This shows that the economy, I guess, is starting to do better. But is there still room here to cut further?
Yeah, the Bank Negara was quite optimistic. They talked about 2021 being a much better year than 2020, of course. The numbers coming in so far look pretty good for Malaysia. Exports are up, and industrial production as of last month was about equal to about a year ago. The unemployment rate is down. It's down below 5%. And so things are looking good in terms of Malaysia turning around. So I expect that what Bank Negara is really doing is allowing fiscal policy to sort of take the heavy lifting right now to make sure that there is a floor under the economy and that those who are still hurting in terms of SMEs and the unemployed and such get the assistance that they need. And given that Bank Negara has already been one of the most aggressive central banks in Southeast Asia in terms of easing interest rates, they can take a pause for a while, perhaps wait until the fourth quarter and see how things go.
Still, though, not a lot of forecasts when it comes to growth and inflation. What are you expecting for the remainder of the year as we also look at this big move in the energy prices, which has such a big play into Malaysia's economy?
That's right. Well, I don't think there's really much prospect for inflation through the rest of this year, at least. Demand locally is still modest, and I think that'll remain the same until we get into next year. I think as the economy picks up in 2021, there's a greater prospect for inflation. In terms of the economy, I do think Q3, the numbers are going to be looking pretty good. You know, the economy fell through the first half by about 18% from peak in late 2019. We might see a surge of perhaps 15% a turnaround in the third quarter. That still wouldn't get us back to peak. And my expectation is that we probably don't see GDP recover to its previous peak until maybe the end of next year. We'll have a good quarter this quarter in Q3. Then we'll see probably a bit of a slowdown as the global economy takes a while to achieve some vibrancy again.
Speaking of vibrancy or lack of, you know, India has been suffering so much as it really struggles to control the coronavirus. What do you expect then from the RBI?
Boy, India's been hurt really badly. They've had the strongest hit to GDP of any country really in the world. The second quarter GDP fell by over 25%. The lockdown was long. It was very strict. And that's going to weigh on economic recovery, I think, given that the downturn was so severe that there'll be a number of SMEs that never recover. The small businesses and individual households are going to have a tough time turning around. My guess is that the RBI will have to cut again. It's a little tough because inflation is still fairly high in India. Inflation's around 5% or so. The repo rate's at 4% right now. So in a sense, there's not a lot of room for the central bank to move, but they may be forced to, particularly because the fiscal response in India has been rather modest, much less if you compare it to what's going on in Malaysia. Malaysia, the fiscal response has been very, very strong and very well targeted towards those that need the help.
Steve, let's just look at India a bit more here. The pandemic is the global epicenter now. And I'm sure that all the estimates for what happens with that economy have gone through the window.
Yeah, I don't think if GDP returns to a previous peak by the end of 22, I mean, I think that's a best guess, perhaps. It's going to be a long road back. I think one of the problems in India as well is that investors are going to be looking at countries that are able to manage the policy response very, very well, given heightened uncertainty in terms of both geopolitical risk and now public policy risk as opposed with regard to the pandemic and any other issues that may come up, climate issues, hurricanes, typhoons, and such. And countries where governments don't respond well and successfully to the coronavirus, I think investors may not look so favorably on those countries in coming years.
The thing is here, people look to the Reserve Bank of India to do something, i.e. cut rates again. They may well do that. With a country and an economy with the structure it has, that has limited effect, and also one whose structure is changing at the moment with the pandemic, perhaps pushing people back into rural areas. Certainly the government there has to step up to the plate. Have they done enough?
The fiscal response in India has been very modest, and I think the most effective move in India right now would be for the government to spend more, to direct more support towards the unemployed, towards the lower income households, the rural households, and provide that kind of support that's necessary to keep consumer spending going. That I think that's going to be critical over the next quarter to 2 quarters before the economy really gets back on its feet. So it remains to be seen what the government will actually do.
Absolutely. Just looking also at US-China tensions, how do they play into the region itself, and what are you looking for as an economic fallout from it?
Yeah, the tensions are creating a lot of uncertainty amongst companies. Of course, a lot of many people are waiting to see what the outcome of the election will be in the U.S. in early November. What I am seeing is that there is a tendency now to spread investments around to diversify supply chains a little bit. You don't see a big exodus from China, but you do see, this sort of, China plus one approach that many companies are taking now of, maintaining their presence in China, both as a point for supply chain, but also as a production point for distribution into the domestic market in China. But one example, Vietnam is an obvious one in that foreign investment fell very sharply in the first quarter, but came back in the second quarter pretty quickly as investors from Korea, from Japan, from Singapore still looked at Vietnam as an alternative location. And I think the rest of Southeast Asia will perhaps see some benefit going forward from this sort of, if you will, China plus one investment approach.